Good morning, Futures family and Team Top Step. It is time for the market prep. My name is John Hoagland. Thanks for trusting me with your time as usual. Today is Thursday, July the 6th. Our focus on the market prep is always seeking accurate context, good risk management, and remaining patient in our trading. I hope that you've had a good holiday. We know it's been a very busy and exciting first part of the week. It's now Thursday. We're getting through the week. It was 4th of July, my wife's birthday. So we had a lot going on around here and a lot going on around Top Step. We're hoping that you're learning about the new situation, and our support team, the entire company, is working very hard to make sure that everybody's questions are answered. So this morning, we've had a lot of data come out already this morning. Just starting at the top, the OPEC meeting continues. Mortgage rates are a little bit higher from last week. Last week it was 6.75, 6.85. This week, the ADP employment came out just more than doubling what they were expecting. They were looking for an additional 228,000 private sector jobs. It came out 497,000 markets, certainly responding to that here this morning. International trade came out exactly as they were expecting at negative 69 billion. Jobless claims, nothing really shocking here. Initial jobless claims, they were looking for 245,000, came out 248,000, and continuing jobless claims, they were looking for 1,745,000. It came out a little bit lower than that at 1,720,000. 745, just about right now. We do have a talking Fed in the form of Logan speaking. 8:45, we've got services PMI. 9 o'clock, we got ISM composite final and job opens, labor turnovers. And 10 o'clock, the EIA petroleum status report, due out, of course, because of the holiday earlier this week, comes out a day later. Tomorrow is the real biggie. The unemployment numbers are due out. Again, that's tomorrow at 7:30 Central Time. So with a lot of information, we're seeing the equities coming off the highs that were put in really over the holiday kind of first part of the week. And the Fed minutes kind of confirming that most of the talking Feds are talking about rates continuing to move a little bit higher, probably the end of this month during the FOMC meeting. We've got Meta stock rallying 3% on the release of its Twitter competitor Threads on Wednesday, which garnered about 10 million signups on day one. That's, of course, per the boss there, Zuckerberg. And we have Janet Yellen actually going over to China for 4 days in an effort to ease tense relations. She's expected to speak to some top officials there, not the big guy, but expectations remain tempered on any degree of success that she's going to be able to come across in easing some of those tensions. VIX this morning up about 7%. But still only at 15.2. Dollar index lower this morning at 103.2 last I checked. The yield on the 10-year spiking up this morning, up above 4%. So we're seeing the 10 years pushing right through weekly kickoff low. We're going to see all this on the charts very shortly. And as you know, yesterday was kind of the beginning of the return to normal trading after the Independence Day holiday. I think we're going to see a lot more volume, a lot more participation today, and certainly tomorrow with the unemployment numbers. So make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you get notifications when we do go live. It's a pleasure to be back with everybody this morning. It's good to see the rooster here crowing early, winning the prize this morning. Good morning, Will. Good morning, Tom, my brother. Love you. Robert, good to see you. Will Shaw, Scott saw and he conquered the rooster. It's in his DNA. Plus, he's got a little chick at home that maybe keeps him a little bit up early in the morning. Caprice, Will, good morning. Nasdaq, Matthew, Theo, Henry, Bill, JD. It's good to see you this morning. Rusty Golfer, my spirit animal's with us. My other brother, Rick, good morning. I love you and miss you. Jenner, I did not have any trouble logging into TS Trader this morning. Maybe it's a local issue. You can always try and reload the platform. Even if you do get it up and it's not acting right, hit F5. Sometimes that'll help reset the platform without having to completely reload it. Casey, good morning. Jason, JD, Sarah Hall, prayers and love to you as always. Khalid, Josiah, good morning. Rooster, not anymore. Mother Hun takes care of that now. Well, that's good. Good. DA, Robert, good morning. Dennis, Bear goes long. Stephen, Michael, Too Humble. It is a pleasure to be here with all of you. Thank you very much, Too Humble. Alejandro, Vafara looks like market's crashing now. Well, we just had some interesting numbers. Now, with increase in employment, the view, I think, from traders is going to be that it's more likely we're going to see higher rates. They're trying to kind of squash the employment situation a little bit to help keep prices down, and they have not been very successful at that so far. But tomorrow morning with the unemployment number, that's going to be the real one that everybody's going to be focusing on, aside from the obvious ADP number today, which just, I mean, more than double what they were expecting. That's pretty big. JT, good morning, and good morning to Bluebell. James, good morning. Anissa, good morning. Travis, McDay, Grounds Hero, Les. It's good to see everybody back here with me this morning. Diggable Seeker, Caesar, and Alfred, Don, Izzy, and it's great to be back with everybody. Today is Thursday. Unfortunately, we won't be having the group coaching or make home money or anything else after the prep today. We're still trying to get everybody settled away with the new situation, and we're all working very diligently to do that. So next week, everything will go back to normal. I'm expecting to do a market prep tomorrow morning so we can spend a little bit of time together. And again, things should go back to normal. Next week, we're working also diligently on creating Top Step TV, and we're looking forward to hopefully rolling that out finally near the end of July. We'll keep you abreast of that situation as well, and we hope that's something you're really going to enjoy as well. A little more community, a little more time together, and trading is a lonely business. It's nice to be able to hang around with some people and talk about markets and all kinds of other things going on with that. So again, we're looking forward to getting all of that together so we can again spend more time with Team Top Step and our futures family. Good morning, Hegel Matters, Iggy, Izzy, and Don Clemens. Alfred, good morning, everyone. So, okay. Without further ado, let's jump into the charts, starting with the daily and the S&Ps. It's been a few days since I've really been highly engaged in the markets, and it's kind of I think a good thing. Monday, Tuesday, Wednesday volumes were pretty low. I think we're going to get back to more normal participation today, if you will. Yesterday, the volume remained pretty low. We did add 14,000 new contracts in the S&Ps in the form of the open interest. So we're starting to look at what I call the Aranimo setup is 1, 2, 3 down days in an uptrend. The following day tends to be one of the days that the market goes in the opposite direction, goes back higher. We'll have to see how that plays out for us tomorrow. But as for now, we've got the markets on its heels. Take a look at the 30-minute chart. The numbers coming out, obviously kind of accelerating price to the downside. There's some weak structure down below that I think it's a healthy thing for the market to go down and recheck. Now, I noticed in the chat, somebody asked, are we creating an island top? And with the gap lower today, this becomes an island top. There is some weaker structure down below that I'm kind of expecting at some point the market to go down and recheck. We left a gap last week. There were a couple of unchecked naked points of control. So again, this is presenting right now as an island top. We've got overnight inventory that's deeply to the short side. We're opening with a gap. We've got visual targets below in the form of completing this gap close and testing down to this naked point of control. Am I expecting this reversal pattern to bring doom and gloom? No, not necessarily, but it is something that I will be paying attention to. You know, here's weekly kickoff low, which is all the way down at 43.50. It remained there last week, even though we did kind of close above last week's weekly kickoff low. So the next target would be a swing high that goes all the way back to, I think it's April of 22, but we have not been able to trade and maintain any meaningful participation above last week's high. We haven't even tested it. We did put our recent high in the regular trading hours, which is something that, you know, the market tends to go back and recheck in regular trading hours if it happens in the overnight session. So we are kind of setting up for a bit of a reversal pattern here, but I'm not really concerned for any big downside moves until we find acceptance down below this level. I know Jim Dalton, a bunch of other people were talking about 4,500 as being a very important level to be able to accept above, and we have not yet been able to do so. So back to the 30-minute chart, we are setting up an island top, 1, 2, 3, 4-day island top. I don't even count Monday and Tuesday because when you look at the volume, it's just absolutely putrid, if you will. It's like they didn't even matter, but still on the charts, it looks like it is an island top. So I'm not going to fight any pushes to the downside here today. Again, we're opening with a gap. The probability of a gap close today remains pretty slim. The market is directional to the downside now. I'm not going to step in front of that until I find some sort of reasonably decent day time frame structure with which to lean on. I might start to look for that structure if we get down to this naked point of control, and then we still have this gap that remains unchecked during regular trading hours. So there's there's always a million things to look at, a million reasons to do something. I think my nuance today is the fact that we've got an island top. We're already directional to the downside. I do not want to try and pick a bottom in this, again, without some sort of daytime frame structure with which to lean on to limit risk. So initially, the nuance for me is I'm going to probably be looking for an opportunity to look for a short until proven wrong, but it's going to be a little bit difficult to do so. Watch the opening range. If the opening range remains at the high of the regular trading hour session, that can give us reference and risk limitation to look for a short. If it doesn't hold, the last thing I want to do is just try and be too aggressive this morning. I know we're opening out of range and out of balance. Good trade locations may come earlier in this session, but it doesn't mean that good opportunities won't come later on in this session as well. So we're just here about a half an hour before the open. What else are we looking for? We're looking for services PMI, ISM, composite final, and job opens, labor turnovers. There's still data to come out. So, you know, I haven't traded this week. I haven't had time, and I don't know what I'm going to do today. Ruling reason, again, the nuances are saying this market is likely to continue to the downside. Again, looking for potential opportunity down here near this naked point of control. We still have, structure here in the form of this gap that hasn't been closed. That has a tendency to close. We have to see what happens in regular trading hours. Here's the TPO chart. If I can get it here, there we go. So Here's that high. Here's Monday. Here's Tuesday. Here's Wednesday. Normal variation. The initial balance was the low of this session. Kind of a little bit extreme because the volume point of control was all the way up here. And this is maybe not presenting correctly here. The TPO point of control is center. So I'm calling this a normal variation neutral day. Neutral days tend to bring days after that where the price looks for new opportunities, new levels to facilitate trade. And that is certainly happening. So here's that one point of control. Here's the gap. Here's the other point of control down here that we're looking at as potential target and potentially an opportunity for an entry, because we've got a long way to go before we get down to these points of control, which is down near the weekly kickoff low. Here's that island top. Certainly looking like it. So don't try and step in front of a directional market. Look for structure as the day goes on if you're going to be looking for opportunities to buy this market. And it's going to be difficult to try and get into this market if it continues to push to the downside. And again, watch that opening range because you never know if that's going to remain the high or even the low of this session. If the opening range is small enough, it just gives you the opportunity to take a trade while limiting risk. Alejandro, no make hog money today. We're going back to everything as normal next week, and then end of the month, we're expecting to launch Top Step TV, which again we're hoping you're all going to enjoy. All right. What about the crude oil here? So we're kind of still range bound. I mean, we were talking about this last week. We talked about it, I think. We didn't have anything on Monday or Tuesday or Wednesday. So we started talking about the fact that range bound markets tend to rotate fully from one extreme to the other. You can see here the market kind of fell down here, failed up here, and set the upper extreme up here, where the market rotated back to the lower extreme, back to the upper extreme, back to the lower extreme, and now testing back up towards the upper extreme. We're still trading this market in range-bound rules. In other words, we get to the upper extreme, we look for opportunities to short because we can limit risk. A breakout that's accepted outside of the area of balance takes us the other direction. We go with accepted breakouts. We trade against these levels for shorts because the market has proven that it's been too expensive before. We have to remember, however, that there is the OPEC meeting going on. And as always in these markets, ACH, anything can happen. Weekly kickoff high, 72.50. We've been up to 72.34 here already in the extended trading hour session. What's it look like on the 30? So here's our look up in the extended trading session, proving to be too expensive up there. Market pulling back, overnight inventory, maybe got a little bit too short here before the open. Inventory is now reconciling back to flat and back into range and back into value. So stay patient. Better trade locations are likely to come as the day goes on. I think our overnight high and low have given us really good areas of potential reference and opportunities to limit risk. Our overnight low is near last week's high. Our overnight high near weekly kickoff high. These give us great reference. The fact that we're in range and in value from yesterday says, I'm not going to do anything here in the middle. I'm going to be patient, maybe wait for an opportunity up near the high or the low. Now, I'm speaking in maybe a little longer time frame than many of you are thinking or looking at these charts. So, there may be opportunities in shorter time frame charts for maybe some smaller opportunities. I'm always looking for excuse me, the bigger opportunities that I catch sometimes, if I'm lucky, on some of these longer time frame charts. And I use the 30-minute chart because it directly relates to the TPO charts. So here's yesterday's chart. Excess low, neither the high or the low of the initial balance were the high or the low. It attempted to put in a late spike to the upside that failed. So we have excess on both sides. We're right in the middle of range. Be patient. Be patient. Again, overnight low, overnight high, yesterday's low. All of those look like kind of interesting areas for us to look for an execution. You know, we do have a naked TPO point of control here. We have them up here as well. The market could kind of randomly move around, you know, all day today. We do have the EIA petroleum status report due out here at 10 o'clock, and they're looking for, where is it? They're looking for a small under 1 million barrel draw in crude. So maybe that's not going to be all that impactful today, but still make sure you're ready and aware. That's at 10 o'clock Central today. So if you want to be flat for it, make sure you're flat before 10 a.m. Central in crude oil. And, you know, opportunities do come as the day goes on. Back to 30-minute chart here just for a second. Added 4,300 in open interest on a day that closed higher, up near an important inflection level. It seems to me like if we're going to remain range bound, we're starting to get a little bit too long in short time frame. Remember, the market always looks the best at the top and worst at the bottom. That's what these markets do. They get the short time frame traders all excited about the big breakout that sometimes never happens. Seems breakouts fail far more often than they succeed. Here's the Nasdaq. So we left the weekly kickoff high at the high, same spot as Friday, because we never really accepted above it. Now, yesterday we have a nice little degree of excess above this level. Even a couple of weeks ago, we've got some nice excess on the daily chart at these levels. Did we add open interest yesterday? We did. We added about 4,000 in open interest on an attempt to break out above the weekly kickoff high that failed. We've trapped longs. Here's the 30, another island top. If we've trapped all those longs up here, guess who's trying to bail out now? All of those longs. We've got overnight inventory to the short side, opening with a gap from yesterday. That gap is pretty substantial and low probability of success of closing that gap. We've got the naked point of controls down here, just like the S&Ps, and the unfinished or unrechecked in regular trading hours gap that we left from here to here, which creates our island top. So again, I'm not going to fight the downside move here this morning. There's more information due to come out. We're waiting for unemployment tomorrow. Monday and Tuesday don't really count that much, as the volume was, you know, very poor. So here and here, attempted move above, failure, island top. The nuances, the tea leaves, the chicken bones are all saying lower. But again, anything can happen. We got to see how these markets play out. Watch the opening range again in the Nasdaq, whatever this product is, because it might provide a decent opportunity. Yesterday, normal variation trading day, almost a normal day in the Nasdaq, which is really rare, and a neutral stance. Very wide TPO. Market is likely to seek other levels to facilitate trade and then return back to this level at some point, because again, it is a very prominent point of control. Here's our island top. Here's where we are now. Visual target below, more visual targets below. There's weak structure down below these markets, these equity markets. And it's important when it becomes important. And it looks like that may be becoming somewhat important for us to be able to recognize those levels today. Gold. Yesterday, a nice look at weekly kickoff high. We are in balance. We've traded down to the low of balance, back to the high of balance. We've got pretty solid extremes. Market seems to be going back down to recheck the lower balance. We added 6,400 in open interest, probably new shorts off the inflection level of the weekly kickoff high yesterday. I'm surprised a little bit by the volume and the increase in open interest as we're still kind of coming out of the Independence Day hangover holiday. Let's take a look at the 30-minute chart. Sonny, congratulations. Got a payout. Excellent. So happy for you. Again, you know, everybody here at Top Step is so looking forward to success for each and every one of you. It is such a joy when we hear of a success of getting into the funded account, getting paid. That's what it's all about. We're so happy for you, Sonny. Very nice job. Okay, so here's gold. We looked at the daily, right? Yeah, we tested up to weekly kickoff high. A test of weekly kickoff low just seems to make sense, right? Overnight inventory wasn't anything until now. Here's the 7 o'clock bar, 7:30 bar. The market seems intent on testing back to this naked point of control. Perhaps a test of weekly kickoff low is in play. It's one-time framing lower so far. I don't want to step in front of this without, again, some sort of daytime frame structure to lean on. Maybe a look down to weekly kickoff low will give me that opportunity. Getting into shorts and directional markets is always something that's been a challenge to me. And so I'm going to just relax. I've been kind of out of the markets for a little bit. I'm going to have a chance to view things a little bit early today. Then I've got some things to do. So, my participation is going to be a bit limited. I'm looking forward to getting back into the markets next week, but we'll see what happens. Here's the TPO chart. Normal variation day. IB is the high. As a matter of fact, 6 out of the 7 of our markets that we look at here had a daytime frame extreme at one extreme of the initial balance or the other. That trend is looking basically like just about 70% of the time that happens in all of these markets. So we've opened, we've got a gap, we're testing down to weekly kickoff low. If we can't close the gap relatively early, we will look for a potential look down to that 1902 weekly kickoff low at some point today, which could provide opportunity if, again, only for the fact that we can limit risk at that level. We view that as kind of an important level. Take a look at the euro. So the euro has been in a short time frame downside structure. Is it performing well? I'm going with, well, just from the information from yesterday, low volume, losing 9,700 in open interest yesterday. I think that the short time frame downside structure is beginning to struggle. It needs new business to continue the push to the downside. And I think it may find that new business down below weekly kickoff low if we can even get there. Last week's low showing a degree of support. In other words, last week, this was viewed as too cheap. Is it viewed as too cheap today? It's looking like it might be. Here's the 30-minute chart. Here's last week's low. Yesterday, big push to the downside, losing open interest. That's liquidation. That's long liquidation. What does long liquidation take away from the marketplace? It takes selling power away from the market. Initiative sellers liquidating positions. They're getting close to a point where it was viewed as too cheap. Some of the longs from above getting out. Now we've got a situation where the market has had some overnight inventory that was too long, looking largely like it's been reconciled through consolidation and a push to the upside right in the middle of value, right in the middle of range from yesterday. Guess what I'm going to say? I'm going to say patience. Patience. Here's the TPO chart. So a double distribution trend day, opening in repair. We've repaired down to this point of control. And now what are we going to do? Are we going to repair back up to this point of control? Excuse me, I apologize. Let me get some coffee here. There's a high probability of that. So don't do anything here in the middle. Down here near our day session low, up here near this point of control. One thing to think about is we're getting pretty cheap. We have a weak high from yesterday. We have an excess low, not a very big excess low. It was almost an attempt at a spike lower. But even if it was, we've rejected that spike lower at this point. So be careful looking for shorts up here. May have already missed our opportunity for longs down here, but this does give us the opportunity to limit risk up here as well. We've had this market moving lower. My goodness, I apologize. And it seems to be getting too cheap. Weak high, excess, low excess. We did have a late spike here on Tuesday. That was accepted. Now it looks like it's being rejected. Here's the 10-year. Obviously, rates jumping to the upside after the information about employment today. More information about that tomorrow. We broke out of this area of balance. The market is doing what I would expect it to do. It had been building volume, holiday, low volume. We're going to have a lot more volume today. We added 13,000 in open interest yesterday, which most days I would consider that to be somewhat inert because the 10-year is such a thick contract. The fact that it was low volume and the end of a holiday kind of increases, I think, the importance of the fact that we added that open interest. Now we're seeing if we can show acceptance below the weekly kickoff low, and there is a lot of space down below there, a lot of space. If we're getting indication that rates are going higher, this makes perfect sense. Here's the 30-minute. So, they're walking right through weekly kickoff low, closing there, opening there, looking above, continuing. I do not want to step in front of this market. I do not want to buy. I do not like green eggs and ham. I am not Sam. There's just no reason, I think, to be trying to pick a bottom in this. Although that said, we'll probably pick a bottom in this at some point. Weekly kickoff low offers the opportunity to limit risk, very low chance of closing the gap. So if we can't close the gap, we're looking for opportunities to sell this market on strength for continuation to the downside. Here's the TPO chart from yesterday. Double distribution trend day, low excess high, but a very weak low. Makes sense, right? Excess, weak low. Excess, low excess low. We've been putting in a lot of excess highs on this move to the downside, which indicates those levels were viewed as too expensive. We've got a nice selling tail on this already. It's going to be hard to try and get into a directional move here, ladies and gentlemen. It just always is. At the very least, for me, it's always difficult. Be careful. And then we'll take a quick look here into the natural gas in about a 5-day range here. Last week's low proving to be maybe a little bit too cheap here. We added 500 in open interest on this push to the downside yesterday, which is somewhat inert. Volume was okay, again, kind of coming off the Independence Day hangover. Here's the 30-minute chart. Here's our push to the downside, only adding 500 in open interest, not tremendous. Inside range, inside value, very little change in the perception of value. I didn't get the sell-in price here, but it's 2657 right here, right where we are, right where we opened. No overnight inventory. Try and stay patient. I mean, my focus would probably be just to start on the overnight high and overnight low or last week's low if we get the opportunity there. All right. All righty. So, well, we've got a little bit long here. So, well, let's take our deep breath. Looking forward to getting back down to business here. It was a great holiday, and hope you guys had a good holiday. Hope we're back in the markets and trading well. Take your deep breath. That feels better. Stay humble, grateful, creative, and centered in your trading today. Again, no make whole money today or any other events. We're still working on getting things back to normal here. And I will look forward to seeing you again tomorrow morning. Same bad time, same bad channel for the market prep. Otherwise, get out there and profit today. Have a great session.